Okay, what's going on, everybody? My name is Steve Zahnd from the Zahnd Team Real Estate Advisors. Right here, we're the only real estate company that guarantees you a 5-star real estate experience, or we pay the commission back. And before we begin, just to make sure you follow at the Zahnd Team on Instagram if you want to check out behind the scenes, and also subscribe to our YouTube channel for more content like this. For when we release it, you'll be notified. All right, so let's dive into the market report. And let me switch the screen. Okay, here we go. So we have a couple things to cover. First, I want to cover with you what's on the market. We're going to go over some vitals. Then we're going to go over some days on market, average sale price, list price to sale price ratio, average sold price, and then we're going to take a look at the end. We're just going to kind of do a little analysis on what's been happening quarter over quarter, and year over year. All right, without any further ado, let's begin. So here we are with the first step, which is what's currently on the market right here. And as you can see in this red line here, and I'll zoom in for you if it's a little small, you'll see that our current inventory is around 55 units. So that's down considerably from where we usually are in December, which is around 171 actually, and currently we only have 55. And as you can see here on this chart, let me zoom back out. As you can see, we have nearly no singles on the market, with only 37 singles on the market. We're quite suppressed. Semis, towns, and condos. As you can see, all inventory levels are absolutely decimated. And it just kind of begs the question, if you know of someone that's thinking of buying or selling, what's holding them back from coming into the market? I would love for you to comment below on what would it take for someone to sell these days? We're kind of trying to do a survey where what is the trigger for people? Is it the new job, or is it just upgrading, or is it moving cities, or do people just want to stay where they are? So we're really curious because we're not seeing any inventory really coming into the market, and just interested in what's kind of holding people back. So if you wouldn't mind commenting, I would love to know what you guys are thinking. So anyways, that's what's currently happening with the inventory levels. And now let's kind of go over the inventory vitals. So as you can see, this inventory crisis started a couple of years ago, and it's been an ongoing issue over the last 5 years. And how the market is usually losing inventory every single year. So for example, in 2019, inflow minus the outflow, we actually lost 41 units of inventory. So say hypothetically speaking, we had 100 units of inventory in January 2019. In January 2020, we would have started with 59 units. Right, so that's what that would have meant, and then here we lost an additional 95. So I mean, as the years are progressing, we're losing more and more houses, so we're not starting with enough cushion to really take us into the next year. And so far, 2021 has been a positive year. We've had more inflow than outflow, and which is a good sign because we really need to build back the inventory. However, just this last month, we went to the negative. So as you can see here, we're now actually -4. So we're going to start with even less homes next year unless something dramatic happens in December, where we have a huge influx in inventory and we have a reduction in purchasing. So right now, as you can see in 2021, this is the inflow and the inventory vitals. I'll take you through this chart. I'll walk you through it a little bit here. So the red line here is how many units have sold. Like this is sold or failed to sell. So that's a combination of just the total amount of inventory leaving the marketplace. It's exiting. The green line is how much inventory is coming into the marketplace in a specific month. Obviously, the gap difference between inflow and outflow would be the cushion that either is increasing in, so if there's more green than red, inventory should be going up. And obviously, if there's red as above the green line, that means we're actually losing inventory. And as you can see, for the first essentially 5 months of the year, we were actually adding back inventory month after month after month, which is really nice. You can see it in the light gray line right here. And I'll zoom in for you just a little bit more so you can see this, because this is pretty interesting stuff. As you can see here, this is where we started with our inventory at 91. Then we got to 129, 164, 170, 170 again, kind of topped out at 170. And this is where we kind of crisscrossed right here. Inflow and outflow was almost the exact same. And then, as you can see now, the red line is exceeding the green line, and this is where the inventory starts falling again. 151, 134, 98, 95, 99, and then 68. And then to start in December, we had 55 units start in December, right? So That's what I just checked in what's on the market. So here we started with 55. I'm always going to take the highest level inventory. So when I do my 15-day check-in, if inventory is at 90, I'm actually going to use that number. I always use the highest number to track inventory. All right, inventory levels. So here, the dark gray lines here, this is what the average inventory usually is for the 5 years. So as you can see, our light gray lines is our current inventory versus our 5-year average has always been much lower than the beginning of the year. The closest we got was in March when we got to 164 over 230. All right. So as you can see here at the end, we finally caught back up. We kind of tied the inflow and outflow a couple months ago, and now again we separated. And this is actually a pattern that's been happening year over year over year, and it's actually a really good indicator. And that's why I asked earlier, if you're thinking about selling and holding off to the spring market, I'd advise you not to do that because, and I'm going to show you why, not just tell you why. As you can see, typically October to December, we have a lot more outflow, a lot more units selling than properties flowing into the marketplace. So that's here in 2020. Again, pattern again in 2019, and I actually have some more patterns over here that show the same thing. 2017 pattern, exact same thing. 2018 pattern, exact same thing again, right? So as you can see, you'd want to be positioning yourself when the market is super hot, which it is right now, and you have an asset that people want, and not a lot of other people are bringing that same asset to the marketplace, but there's still a ton of buyers willing to consume your asset. This would be the right time to bring it to the marketplace, because if you're going to wait until spring, which is here, right? I'm not sure if you see that, which is right here where you have the massive influx. So here's 2021. Obviously, this one's a little bit different because of what happened last year with the health crisis, right? But you can see here, March, April, May, big inflows. Lots of inflows in these months. So here in 2017, huge inflow. This is when the government stepped in to cool the marketplace, had a huge inflow. Right? Again, 2018, huge inflow. Here again. So why would you bring your asset to the market when everybody else is bringing it, right? So, if I had a valuable hockey card and you had a valuable hockey card, and we both brought it to the market at the same time, and there was only one buyer, now the buyer's in control. And now, so essentially, if we bring our asset to the marketplace and there's few buyers, a lot more buyers than we do have the asset, then people are going to want to purchase it for more money because it's worth more. There's nothing available. So again, I think I beat that to death. I apologize. Sometimes I get a little deep into my examples here, but definitely this would be a great time to bring your property market, because if the trends hold true, there's going to be more outflow than inflow, and we could definitely use it. All right, so here, let's just check out the inventory vitals. So now we're going to compare October, November, and we're first going to check in on the annual rates, and then we're going to break down month over month, okay? So annually, we're looking at an inflow rate of 9 homes per day. So the Guelph real estate market is bringing to the market 9 homes a day, and the 5-year average is actually 8.3. So we're actually bringing more homes to the market than we ever have before, which is great. We have a 10% increase on that. So month over month, though, in October, we only brought 6.6 homes to the market a day, which is actually 14% lower than our 5-year average. And currently, our inflow and outflow rate for November was the exact same. So we didn't get any gain on. We lost some inventory here, inflow in last month in October, and we just stayed flat in November. How about outflow? So outflow. The average amount of homes that are flowing out of the market per day are 7.6, and the average 5 years is 6.32. So as you can see, we have a 20% increase in outflow and only a 10% increase in inflow, which means there was a 10% more buying pressure this year than there was inflow pressure. So even though we had more flow coming in, the outflow was double, so 2x. Here you go, looking at October, 6.3, 6.5, so outflow also matched inflow, and then here we increased 6.3 to 5.6. So right now, inventory is flowing out of the market in November faster than our typical 5-year average. So sales are actually up. Outflow is actually up 11% versus our 5-year average for November. So when you're staying flat up here where you're getting 5.9 homes a day with a 0% increase, for the 5-year average, but then you have a big inflow. This is the problem, right? It's going to take away our inventory. We're going to lose more inventory, and that's why I'm urging you, if you are interested in selling, you might as well take advantage of this market while you can. And yeah, this is just tracking the 5-year average rate. So as you can see here, we're a little bit higher, and as you can see here, we're right on it, right? Yeah, drop a comment if you want me to show you something different, or if I'm missing something that you want to see. I'd be definitely interested in getting your feedback on what I can do better for you here. And this is one that's interesting, right? This is how many homes are failing to sell. So again, we usually have 2 homes fail to sell per day in November on average, and right now we're at 0.7. So there's a 63% drop in homes failing to sell. It's a little bit higher than last month, but still way under the 5-year average. Okay, so here you go. You can kind of see the total trend right here. We got 3,818 homes in, 2,550 homes sold, and then 471 homes failed to sell. So when you add these two up, that's 3,022, which is what brings us to -4. All right. All right, so how about the trends? So let's get into a little bit of trends and predictions for December. So here you could probably see my prediction lines that I got here, and where I believe inventory is going to end based on the last 15 days worth of inflow and outflow. So the 15-day trending inflow, so we have 55 homes on the market right now. We're getting 6.4 homes to the market every single day. So for the month of December, we should have 192 homes come to the market. So that would add to the existing inventory of 55. So 55 plus the 192 would be 247 homes to consume. That's how many homes we would have available to buy. Okay. 15-day outflow trend is 5.9. So that brings us to 178 homes a day. 178 homes for the month. However, we're expecting about 0.5 homes to fail to sell as well, which is about 14 homes are going to be expected to fail to sell. So when you add up the 178 and the 14, that's also 192, funny enough. And now we got 192 homes flowing in and 192 homes flowing out, which lands us, which I'm predicting for the inventory to start in January around 55 units, which is represented in this orange bar right here. And here's the inflow and the outflow, which is going to meet in the middle based on the trend. So what does that mean? Does that mean we're in a hot or cold market? Well, I'm sure based on my presentation, you can probably tell we are in a very hot market still because there's no inventory. I honestly don't think the demand is greater than the typical demand of a real estate season here in Guelph. I think demand is actually pretty constant, and it's been constant over the last 5-6 years. It's just that when you continually lose supply, month over month over month, year over year over year, and then there's no supply, right? If demand stays constant, the supply can't keep up. Now you're going to have that increase in price, and it's going to simulate a massive surge in demand when it was just actually a failure of our officials and our building community bringing enough homes to the market. At the end of the day, this is their. I'm going to blame it on them. I'm going to say to that. It's just we're not bringing enough homes to market. Policy needs to change. We need to get more homes to market and supply this demand. Blind bidding isn't what's increasing average sale price. It's the lack of supply. It's plain and simple. So do something about it, guys. Here we go. So yeah, anyway, so months of inventory on the market here is 0.29. So that means essentially if January 1st rolls around and our buying pressure stayed the same and no new inventory came to the market, that means all of our inventory would be gone in approximately a quarter of a month. Okay, cool. So what kind of impact is this having on other vitals? So here we go. We have our days on average, our homes on, wow, I can't talk right now. Our days on market average is sitting at 9. So as you can see, as the inventory was spiking up, remember I showed you beginning at the video that inventory was accumulating month over month over month, and then we started declining again. As the inventory was accumulating, you can see that there was an increase in days on market average, right? So we went from 9 days all the way up to 13 days. We hit that peak, and now we're starting to slide back down the other way. As inventory is dropping, so does this metric. It's very tied together, which makes sense, right? So 13 topped out, went to 12, went to 10, and now we're sitting at 9. So we trended up, and now we're trending back down because there's no inventory. All right. So that's where we're sitting there. Let's go to the next slide. Average list price to sale price ratio. Currently, we are sitting at 112%. So if your house is worth $100, you're getting 112, right? So if you're asking for 100, you're getting 112. That's essentially what this is saying. So again, this is also increasing, and it also is going with inventory, right? As there was no inventory at the beginning of the year, 112 average. Funny enough, there's almost exactly as many homes today as there was at the beginning of the year, and we have the exact same list price to sale price ratio. Coincidence? So here we go. With low inventory, we have a higher list price to sale price ratio, obviously, 112%, and then it started going all the way down, and we hit, 101%. So we almost got to break even there, and then the inventory started to disappear again. This is the accumulation of inventory, and now the decline of inventory again. And as it's declining, it's going up, right? From 101 to 106 to 109, 109 again, 108, and now up to 112, right? Average sold price, here we go. So this is what it looks like. Let me zoom out a touch. So we actually, funny enough, see, this is why you never really want to judge anything just based on one single month, right? Because here it looks like the market dropped 11.94%. I'll tell you right now that the market did not drop 11.9%. For that sample of sales for the, what was it? How many sales do we have last month here? So in November we had 188 units sell. So you can't really judge a whole market. You can't judge the market based on 188 units when there's thousands of units that sell a year. So here in November and in October, right? October saw us break over 800, and now again November saw us fall below 800 to 760. So again, it's a fun thing to look at, but it should just be more for looking for fun, I think. Because it kind of shows you the gap. Like year over year, it does tell a good story because if you sold in January last year and you would have sold in January this year, if you would have bought here and sold here, there's almost a $200,000 gap. But still, I prefer to look at this one. So this is month over month. This is taking every single month and taking its sample size of it and then just analyzing the 1 month. I actually prefer looking at the whole data set because I think it tells a more honest story. The story that this accumulation is telling us is that average sale price was definitely set to increase this year based on the inventory levels, and as we got more sales, the average sale price has been on a steady increase, right? And then we kind of flattened out when we had more inventory coming to the market, and now that we have less inventory, it's now slowly again pushing up the average sale price again into the close of the year. So it looks like at the end of the year, these numbers are pretty much finalized now. We have 1 more month left. It looks like our average sale price is going to land around $760,000. So in 2021, if we took every single sale that happened in 2021, put it all together, our average sale price is $760,000. That is up 23% from last year, which was $616,000. Again, you can see like the direct correlation between inventory, days on market, right? So here we had 10 days average days on market, 19 in 2020. And funny enough, in 2017, which was considered an extremely hot year, we actually grew 21% in 2017. We still had an 18-day 18 days on market average. Difference between 2017 and this year is that halfway through 2017, the government stepped in to cool the housing market. It really did cool it down dramatically, and then 2018 was a very flat year. As you can see, it was actually down 0.06%. But this year that did not happen. The government needed real estate to continue pushing the economy, and it has, and they did not put any water on the fire to cool it down at all. They just kept it and let it burning, and that's why we are here where we are right now. So here we go. You can see it, the accumulation here. So we're sitting at 2,551 homes sold this year. And that is actually more homes than we've ever sold ever. Here we go, 2,551 homes. That is now the new record since I've been tracking since 2014. The next highest homes we've sold was in 2016 at 2,457. So units sold is going up. And as you can see here, We sold 16% more units in February, 62, obviously, last March, there was no homes sold. 62% increase here. April, 278% increase. May, 77% increase. But then essentially it started going the other way. This is where 2020 really started outperforming us here. Really, we had 5% less homes sell this month than we did last November. So the market's kind of flipped there. Quarter over quarter, if we just want to take a look at quarter over quarter, 2021, sorry, let's just say 2021, my bad. What is it up quarter over quarter? 7.8%. So home prices, I like this data set better too. It's better than looking at just every individual month, but looking at 3 months at a time to kind of see the trend. So here you could see, based on Q3 2021, we're actually up 7.8% quarter over quarter. So what that means, if it was $100 in Q3, a home was $100 in Q3, that same home in Q4 is worth $107, right? And it's the trend. Like, that's, if you're on the buy side of this equation, really the waiting game is costing you a ton of money. It's like, no, I'm going to wait for, to build up my down payment a little more. Well, what kind of down payment are you trying to save up? You're trying to save a $5,000 down payment, $10,000, $20,000, like how much more are you saving up? Because 7% on 100,000 is $7,000. So I mean, if you waited 3 months to save 5, it just cost you 7, right? So sometimes you just got to really check your math, and that's why you want to talk to an advisor, right? Because it's like, you want to get in the real estate market, you have the job, you have the income, we'll find you the money, because waiting is costing you more than just getting in at this time. As you can see here, quarter over quarter, Q1 versus Q4 2020, up 14%. Q2 versus Q1, this is one of the smallest jumps here. We got 2.18% quarter over quarter. Q3 versus Q2, you look at that, only 0.5%, and now here in Q4 we're up 7.8%. So as you can see, these two middle quarters, and if you remember the inventory chart, as the inventory was increasing, how much has actually had an impact on stabilizing the marketplace. It's crazy, right? So, you had our huge jump in Q1, right? Massive jump, quarter over quarter, 2.8, year over year, 27%, and then quarter over quarter, only 0.5%. So this is inventory coming in, stabilizing the market, inventory gone, 7.8% growth quarter over quarter. All right, I hope that was helpful for you guys. Again, if you need to want to have a sit down and talk about your specific scenario, you want an updated evaluation on your place, you kind of want to see where things sit, you just want to talk about how to get into the real estate market, anything like that, we are happy to talk to you. We're happy to show you this kind of data. And we can do this for any marketplace. And obviously, we wouldn't go into this much granularity because obviously you're just probably trying to find out how much the house is worth, or just trying to see how you can get into the market. I hope essentially this is just to show you what's going on, and then also kind of give you some advice about, hey, if you're thinking about not selling right now because you want to wait to the spring market, you're probably going to put yourself at a disadvantage because you're going to bring your asset to the market when everyone else is bringing their asset to the market. And if you're a buyer waiting to get into the market because you want to save $5,000 to $10,000, by the time you make that $5,000 to $10,000, it might have cost you $20,000 to $30,000. So you just want to maybe take a look at that. Anyways, I hope that was helpful for you. My name is Steve from the Zahnd team, and I'll see you next time. Thanks so much.